Good morning, everyone. It is 6 a.m., half an hour before the market open on Friday, July 26th. Hope you're having a great morning so far. We were waiting for this PCE report, the personal income and outlays, but specifically the PCE component of that. So let's see how that came out and how the market is reacting. So we really just care about this PCE year on year and also this core PCE year on year. So PCE year on year previously was 2.6. We were expecting 2.5 and we got 2.5. And core PCE previously 2.6, expecting 2.5. We got 2.6. So this is pretty much right on top of expectations. So there shouldn't be a huge reaction in the market today. Let's take a look at our futures. And our futures are up significantly. So 75 basis points on the S&P 500, 1% on the NASDAQ, and 55-ish basis points on the Dow. So that's a significant move upwards. They're all non-random to the upside, but that's probably not the report, given that the report just came right on the dot. So this is just a reaction to the big movements that we've seen in the last couple of days, a little bit of a bounce, a little bit of a reprieve. So we'll have to take a look at that carefully, see if it's enough for us to believe that we're actually bouncing and moving up, or is it just kind of like a dead cat bounce or a fake out to draw some more money in before we dump. So let's take a look at that. First, let's see what the reaction was to that report. Is this? So you can see that that's the report right there, 530, a little bit of increased volatility, and that's it. Zero directionality. We went up, we went down, we went sideways, and we're basically chopping sideways slightly down from where we were before the report. And you can see that the size of these bars did not even change that significantly. Normally, we see a pretty big change in bars, at least for the first few bars. But really, it was just one bar that was that was big and outsized, and the rest are, yeah, they're bigger than the previous ones, but not hugely so. Same with the NASDAQ, but not nearly as big of a reaction. And we're just kind of chopping sideways, slightly down. And then the IWM, okay, bigger reaction in the IWM. You can see that bigger reaction. We got that volatility for a little bit, and then the bars are getting smaller. Overall, after the report, everything's sort of trending down. And Dow Jones, not really. We don't get enough data in the morning. So the report's kind of a nothing burger. So the market is just going to do whatever it would have done without that report. We do have FANG stocks starting to report. Well, we had Google this week, but the rest of them starting next week. So that'll probably be one of the major catalysts next week. But for now, let's take a look at what this bounce in the futures is looking like. We've got the S&P. Looks like we have high potential of opening just above that MA50. That is really going to have to hold. If we can't get above this EMA 8 or EMA 20, then we are going to be very uncertain about this bounce. It would be more of a chop sideways. If we break back below that MA50 and start heading downwards, that's not a really good sign. The good news is that we do have support relatively close, so there won't be that much movement. So it would look more like, I thought we drew this yesterday, but maybe it got erased. It could have looked something like this. Okay. So right now we're at a critical point and we just want to observe very carefully. We don't want to guess what is going to happen, but there is, these are the two kind of, well, I guess there's a few scenarios. And then once we do that, then we don't know. Oops. Or we could just chop sideways for a little bit. So there's so many possibilities, and right now there's no strong possibility. There's no strong option. They're all kind of equal. And so we just have to wait and see. And we don't really want to position ourselves one way or the other. Right now, it's best to just maintain a very neutral or maybe even cash portfolio until we see a better direction. We might find some individual stocks or opportunities that look really good and that look like they're higher probability. But if the market decides it's going to go the opposite way of whatever that opportunity is, and it starts to make a strong move, like if it does this and it moves very strongly downwards, and this starts to become a correction rather than a pullback, then that could very easily overpower any bullishness that we see in the individual stock. So we have to be very, very careful here. If we're going to take a trade, it's going to be like a tail risk trade. It's going to be a really high reward to risk ratio in small size. We're not going to put on any real positions in this type of scenario. So we just want to make sure that our portfolios are neutral. So today's work is going to be neutralize your portfolios, maybe go into all cash, and then wait over the weekend, make sure we don't get any weird surprises over the weekend, and start seeing next week with fresh eyes. From what we can tell so far, next week is going to, let's see, housing jolts. Jolts will be somewhat important simply because the Fed will look at that. Then we have the rate decision on July 31st. That shouldn't be a surprise to anyone. It should just no rate cut and no rate hike should just be unchanged. But they might say something afterwards that will introduce volatility and directionality. So this could have a big impact depending on what they say. And then we got some PMI. So, and in the unemployment rate. So we do have a couple of large events next week, but it looks like a lot of the reports are going to be dominated by the earnings. So let's see next week. But we have Apple, Microsoft, Amazon, Meta. So that's what I was talking about. We have a lot of FANG stocks reporting next week. So these are going to be very, very influential on what happens next week. Now, big FANG stocks. So if I go and look at my 90-day highs right now, we already looked at this yesterday, but we didn't go and look at the type of stocks that were making 90-day highs and 90-day lows. So if we look at the type of stocks, all I'm going to do is just take a quick look at these sectors. So the 90-day highs, utilities, energies, these are all probably ETFs. Yeah, for the most part, ETFs right here. And healthcare, finance, staples, basic materials, aerospace. So what we're seeing is a lot of very defensive sectors. If I look at the 90-day lows, retail, some energy, some medical, uh, the discretionary, technology, business services. A lot of these business services are going to be somewhat tech related, not all of them, but some of them. So what we're seeing is that tech is kind of breaking down. And if AMD is a major one right here. So that doesn't give me a lot of confidence. Or if my tech is starting to break down, unless these earnings are absolutely amazing, then and it rescues the QQQ, it looks like the QQQ is just on this downward momentum. And even that, we're not super confident because what happened to Google? They announced a earnings surprise of over 2.31%, and they surprised to the upside on their revenue uh, by 0.63%. They had really good earnings. They had good forward outlook. What they said was that, oh, maybe this AI thing isn't as amazing as everyone thinks it's going to be. Okay. And then they kind of went down, and then they had that announcement about not them, but OpenAI announced a competitor to them, AI driven search. So this, based on the performance of Google, we'll want to see today, but you can see that at the open right here, we're actually down still, even though on our futures, the QQQ is up 1%. So that's not looking good for Google. Well, if Google is performing this way, then that doesn't give us a lot of confidence on Apple earnings, Microsoft, Amazon, Meta. All of these could report great earnings just like Google did. And for whatever reason, they could still dump. And that would be bad news for the QQQ. We're already well below that MA50. We are hitting this region, but if we break this region right here, then we're going down to that MA200. So we just have to be very, very cautious here. We're going to be, yeah, it looks like it's bouncing here. We are on the futures 1% up, but we can see that that is just the previous day's low and not even halfway of the entire range of yesterday. Then we have that MA50 immediately above us, this 470 level immediately above us, the EMA8 immediately above us, and that EMA20 not too far behind. So there's a lot of stuff we have to get through before the QQQ can be considered bullish again. And this is already looking a lot like what we were saying might be the future of the S&P. We could just bounce right back into here, these levels where the MA50, the EMA8, and EMA20 seem to be converging, and then that could be it. Possibly. Okay, I'm not saying that is going to happen. I'm saying that looks like a pretty strong possibility. So we just want to be very, very, very careful here. Let's take a look at what VIX is doing. VIX is coming down some, but we are still at elevated levels. And it may not. You could see that this was a little bit of a buildup as well. Pulled up, pulled back a little bit, went back up, pulled back a little bit, and then finally spiked. So this is still possible. This current pullback still has the potential to turn into a correction, and the markets could go down to that MA 200. So we just, again, everything here is telling me be careful, be careful, be careful. And in the action step in that being careful is neutralize your portfolio. And in fact, I'm leaning towards go all cash in your portfolio and just ride this out until there is more clarity on which direction it's going to go. And if it ends up chopping sideways, then it ends up chopping sideways. Then it doesn't hurt us to be in all cash. So far, that's what everything about this market is telling me. We can take a quick look at the Fed watch and then see what TLT is doing. So we're still at 6.7%. I don't know. It feels like they're just not updating this because it's just the same number over and over again. But it looks like maybe during the day they did change it yesterday to 6.2. But at this point, this should be very, 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 very close to zero. We're coming up on July 31st here, and then September 18th, we are still 100% priced in as a rate cut in September. I think the bond market is just way too enthusiastic about inflation coming down and the Fed taking action. And again, if they do take action in September, it's going to be really, really controversial because of the elections coming up. And they've been saying out of their mouths that they need to see the data. And one more data point isn't hey, we're going to wait and see and look at the data. So their motivations would be questioned and saying like, well, why are you doing this? And then the also what we were saying earlier about how they waited way too long for to take action on inflation because they kept saying it was transitory. So they don't want to make similar mistakes. The same people who are in the Fed right now don't want to make two huge mistakes during their regime. So they're going to err on caution. There's like we're going to be absolutely data driven this time because they ignored the data the first time and it got them into big trouble. So now they're just going, well, no matter what, if they no matter what happens, if they start taking action and it ended up being too late, quote unquote too late, they can always say, well, but that's what the data said. That's what the data said. They have a way of protecting themselves instead of previously where the data was telling them, you better do something, you better do something, you better do something. And they're like, oh, it's just transitory. Oh, the data is wrong. Oh, the data is wrong. So they really have to follow the data this time. So this is going to be very, very unlikely that we're going to have a rate cut in September as well, unless we start seeing the data, which, you know, we'll get July, we'll get August, and then we'll get a little bit of data in September. So we already had July, sorry. We'll get August and we'll get a little bit of data in September. So does 2 data points give us enough? I don't know. Well, that'd be harder to justify. I guess it maybe they could get away with it, but it would still be difficult to justify that just 2 data points changes my entire perspective. So uh, we'll just expect these to start creeping down, especially next week. We do have some data, the employment and the PMI. That should change this quite a bit. And other than that, we're just going to stay very neutral. We're going to spend today making sure we're well protected. If we have a pair, make sure that the pairs are in related sectors so that if one you have a long and you have a short, you want them to move together. Otherwise, if they diverge, that is either going to work heavily in your favor or heavily against you. So you actually want the put and the call to move in the same direction in relatively same magnitudes. So you want them to be related. And then if you have unrelated, that's not a pair, that's just long short. That's a long short portfolio. And what you're counting on in that is that the whole market moves. It's not sector specific. And right now we could say that the whole market is moving, but we are kind of sector centric, specifically in the consumer discretionary and the technology sectors. So it could, if you have one in tech and one in consumer staples, that might not work out for you. So it's a lot easier. It's a lot simpler just to go flat and go in cash. And that's going to be my approach. So just be careful. Don't make any big bets. Don't allocate huge amounts of money. If you want to take a lotto trade or a tail risk trade here or there with a small amount of money, then go ahead. That's fine. But for the most part, we're going to look to be neutral until we get more clarity. So that's going to be it for this morning. Have a wonderful rest of your day, and I will see you next week because we don't have a post-market review. Although if you are in my portfolio classes, then we do have a Q&A session today at 1 p.m. So either I'll see you there or I'll see you next week. Have a great day.